How's it going today, Albert?
It's going well, Melissa. How you doing?
I'm good. I'm so good because one of the greatest shows that exist, and it's just a really pretty show to watch. It's a feel good show. It's called Selling Sunset, came back on Netflix. And I should have made you watch it, but I think you have people in your household who might watch it. So we're going to talk a little bit about it, okay?
I'll watch it. I have to watch it for next time, so
I
I
mean,
got
there's
homework.
seven seasons. There's 7 seasons of beauty, so I don't know if you could catch up.
I'm gonna start. I have done actually been involved in some houses out there, and
Ooh.
I'm interested in it. So I'll take a look.
All right, so
Entertainment.
you might know like the other side of this because obviously we're just seeing what's on television and that's of course produced to the wazoo. So basically a premise of the show is it's a boutique brokerage on the Sunset Strip and everyone they employ on the show is like a beautiful human being. Like always dressed in designer and it's just beautiful to watch and then they place them in these gorgeous mega mansions in all over LA, Beverly Hills, Malibu, everywhere now. And you just like you watch it and you're like, wow, like what a life. Obviously that's not for many people. I know tons of people in LA, they do not live like that. But it's a beautiful show to watch. So on the recent season, actually, they've been talking and it was probably filmed like months ago. So I don't know when this came into play, but they're fighting this thing called mansion tax. And they're making it really villainous to be like, we got to sell this before the mansion tax. They even
Yeah,
asked one of their clients to lower their price by $6 million to avoid this
to
mansion
avoid
tax.
tax. Yeah, I
So
understand.
tell me, what's mansion tax? Where is it? What do you know about it? What do we do?
So it goes by many different names.
Oh,
So what it is essentially these municipalities, state, city governments say, you know what? There's these big transactions going on. We want to tax them. We want to get more tax revenue in the door. How do we do that? They say, you know. So they figure out ways to do it. For example, in Pennsylvania, I think there's a 4% tax. Okay. And it's paid 2% by the seller, 2% by the buyer on any
okay.
deal. On any deal. And you didn't even notice it because it was like in the thing.
Okay.
Tra- New York City has a transfer tax.
Transfer tax.
Yeah,
I paid that, correct.
right.
It
Transfer
was one
tax.
I think it was 1%
One
for
percent. So it was
each
one
one.
percent and 1%. So it was two
But that
percent.
might be
1%.
counties. Okay. Go
No,
so
it was,
that's all.
that's the whole state of
Mm.
Pennsylvania has this transfer tax.
Oh. Okay.
Then then New Jersey has a mansion tax for homes over, I think, over $1 million.
Oh wow.
New York City has what's called a mortgage recording tax. You heard of this?
Mhm.
So mortgage recording tax is 2.8% of the mortgage of the money that you borrow of the mortgage that you get. You have to pay a tax of 2.8% to the government.
I was gonna say to who? Okay, the
You're the
government.
buyer. You're the buyer, right? And you're
Okay.
getting a mortgage. You have to pay 2.8%. Then, if you're a seller of a property in New York, you have to pay 3% transfer tax.
Okay.
Then they imposed for homes, very expensive homes, they imposed an additional tax. So this is just these kind of taxes are ways that um, municipalities are trying to raise tax revenue and really get involved and take something from these very large transactions that are happening. And they're saying, look, $1 million or whatever. And honestly, they're saying, oh, for you, 1%, I'm going to add a 1% tax. It's 1% of $1 million, right? Is 10,000. You know, in the scheme of the transaction, 10,000 is not a lot of money, but it is a lot of money by itself. But you're making this huge purchase, and it's part of the closing costs. So you're like, oh, so they're just trying to roll it in.
Hmm.
So it's sneaky. And then there's it's not, it is what it is. Like they're just making taxes go up, right? That's essentially ways they're finding ways to tax us.
Mhm. Does this also include, like, if you were selling, like, a commercial building? Are these rules and
Yeah.
okay.
They vary for different things, but yeah, for sure. We have those kind of taxes. And it's like, it's part of doing business. Like you have to now include it in what you're doing. And 3%, if you're thinking, for example, when I sell a property in the city here, the seller has to pay 3%, plus you have to pay the broker, right? So yeah, you're like, 5 or 6% for the broker and 3% for the transfer tax, and you have to pay for the lawyer. Okay, so you're like, oh, you're almost like somewhere between 7 and 10% of what you're paying in fees just to sell the property. And you're like, oh, well, that's a big deal.
Oh, yeah.
That's a lot. It adds up. So you're they get you. And New York, it's a funny thing. It's like this mortgage recording tax is a very interesting uh, business. So I'm going to say something. It's pretty complicated. So the mortgage recording tax in New York, you only pay it on the new money that you borrow. So, for example, you're let's say you're buying a house for $500,000, and you go and you get a mortgage for 300,000. Fine,
Mhm.
or 400,000, right? 400,000. And they say, okay, well, your mortgage recording tax is like 2.8. I mean, just being 2.8% of 400,000, so that's like $12,000, right? Okay. So if nothing happened before, that's what you would pay. However, there's a thing that it's only on the new money. So if the seller of the house had a mortgage, let's say they had a mortgage for 300,000.
Mm.
Okay. It's very complicated. I'm going to try to go slow. And then you say, okay, well, listen, how about your bank that you used to lend you the 300,000 seller assigns me my bank so that I'm only borrowing $100,000 extra. So your bank takes the old 300,000 as an assignment, it's called, and you're only the new money that you're borrowing is 100,000, not really 300, not 400,000. You understand what I just said?
Okay. Partially, keep going.
So basically, the seller had a mortgage of 300,000. You're buying the house, and you want all in a $400,000 mortgage.
Right.
So your bank is gonna take the old mortgage of 300,000 and add on 100,000 to it.
So 100,000 is new money.
New. So
I
your
got it.
taxes on that is only 2.8% of the new money.
Okay.
So you just saved $8,000.
So that's good.
That's amazing. But
Yeah.
you see how that's complicated? Like that's
Very
a whole,
complicated.
people do these things to, like the law is on the new money. And then like people do these things where they do mortgage assignments so that they only have to pay for the new money. And that's a typical practice in New York where, a tax was created and then the government's like, well, any new mortgage money, you have to get a tax. So they say, well, you don't have to worry about the old money. I'm going to only tax the new money.
Mhm. So who's
Interesting.
gonna help someone, like, navigate this during their transactions? Like, who's the person?
Right. So there's lawyers and title companies, right? That usually are involved. It depends on the state as to how things are done. Like I know certain states they don't use lawyers; they just use title companies. So those people, and then if you're borrowing money from a bank, they have their protocols that they go through about all the things they need. So very often, you're covered in their checklist of things that they need. All the things they make you do, you're like, oh, I didn't know I had to do that. Now you're like, oh, the bank brought it up. Oh, do you need flood insurance? Oh, well, you know, if let's say, you and Alan, you were selling a house to somebody and they bought it all cash, it's their business whether they get insurance for the house or not, right? But a bank is going to say, no, no, you have to have insurance,
You have to check all the boxes. Right.
right? So those are anyway. I know we went diverged a little bit, but
No, it's okay.
I was giving you an example of how people, work around, or how they have to act with all of these new taxes. Um, it's not easy, and there's certainly incentives to, like if there's a mansion tax in a particular place of $5 million and above, and you're at $5 million, why not lower the price to 499?
Right. And that's what I'm sure happened.
Right. So things happen like that.
Wow. How often do these like mansion taxes or transfer taxes like change or become new? Like is this a very changing
It
term?
is. We talked about in earlier podcasts, how politics gets involved, and you know, as politicians and governments need to raise capital, they try to find ways to do that.
Right.
So, they sales tax and different kinds of taxes. So they're always looking to figure out ways to raise money. So this is something that's a constant, continuous conversation about raising taxes. Who are we going to tax? Who's going to feel it? The rich people should pay for the poor people. People that are doing big transactions should, set aside something. There's a moral obligation. Those are kind of conversations that people are in. You know, generally, right? There's more people that have less money than people that have more money,
Mhm.
right?
Definitely.
I'm just
Definitely.
checking in, right?
Yeah.
So then, if you're a politician and you get elected, who elects you? More people elect you than less people. So generally, if your base is making less, most of your base makes less than more of your base, right? So then you're like, so then I'm going to create policies that help the people that elected me, right? So then, so you say, I'm going to tax the rich people, right? Because they didn't elect me. The but the people who have less did, and those people are going to get money from the government, and I'm going to get the money by taxing the rich people, which is a policy that you can understand. The haves should, you want everyone to have something, so they say, okay, well, how do we redistribute wealth? We do that by taxing. So that's, unfortunately, people won't voluntarily do it, right?
Right.
So taxing is like a forced charity.
I have a question. Is there a way, and this is probably an awful thought, that if like let's say the house is $5 million or over 5 million, to avoid it, can you pay in installments?
So people do things like that
They
to
do?
get
Okay.
creative. Yeah.
Yeah, I'm
Like
just
like like in Pennsylvania, I've seen people do this thing called an 8911 transfer, where they're not buying the whole property. They're buying 89% of the property, and then so people try to.
we don't support that, but yeah.
No, it's like it's, I think the tax code says, you could do your best to, not, pay less taxes, right?
Mhm.
It's part of the, but that's what people do. So I'm, you know,
Right. I was trying to look up as we're doing this, which states have like the highest mansion tax, and it says that Vermont is 16% on properties valued over 5 million. That's high.
it's, I don't want to say Bernie Sanders.
So yeah, politics does play a part in
Yeah.
everything.
But then you ask yourself, how many homes are there above $5 million in Vermont?
Right.
I
Probably
don't
a
know.
handful.
It's not a lot, but,
Mhm.
so I don't know. And I don't know, maybe there are less taxes in the state. I don't know,
Mhm.
and so, for example, New York City has high sales tax.
Right.
So maybe in other parts of the country, there's less sales tax, but higher transfer taxes.
Mhm.
Those are things,
All right. So we're going to wrap this up here, and thank you so much for your input on mansion tax, because the only reason I brought this up and learned about it is because I'm watching one of these, pointless reality shows that I love. So my homework for you is to watch any of them. There's Million Dollar Listing,
Yeah.
LA, New York. I've watched them all, Albert. There's Beverly Hills. I mean, Buying Beverly Hills was a short one on
Right.
Netflix. They're Selling Sunset of OC, LA. They did Tampa even. So
Okay, I'm gonna watch Selling Sunset.
honestly, whatever. I probably watched them all because it's just entertaining and it is partially educational. It gives you a little taste of some of these rental
Maybe we
words,
should
and
do maybe we should do a podcast about the reality behind the reality shows.
that's actually a great one if you want to, because I'm obviously seeing one side of it and you've seen the back end, of course. So if you want to we can decide on one of them. We can both watch and we'll see what I take from it and what you take from it. I think that would be super fascinating.
That's
And if
a
you
good
guys
idea.
want to watch it with us, listeners, that'd be great. So
That'd be fun. Okay, I'll
thank
thank you for that, and I'm gonna tell this to my family now because my
tell your
wife just
family
told me this morning. So she goes, "I watched Selling Sunset and it was great." I'm like,
it.
"Okay." I'm
It's
like,
really great, but I'm positive as someone in the business like yourself for over 20 years, you're just going to know this is all fabricated. And if you even read about it, they say like none of these homes are actually their listings. They're just like renting these properties to shoot in. They're like shooting locations. I don't know the truth behind it. It's just a rumor. So it'd be fascinating to see your point of view.
I got
All
you.
right.
I'm looking forward to it. Thank you.
Thank you so much, Albert. Have a great one.